Looks like Taco Tuesday is here on a Wednesday, and as the saying goes, our charts are no match for his tweets. It's the same old tariff playbook, it strikes again, but what if I told you there's still a pretty big threat out there, and believe it or not, it has nothing to do with tariffs. And if you're not paying attention to this, you may fall victim to the next bull trap. So welcome back to the Trade Brigade Midweek Market Update, where we'll take a look through all of the data points, including the trap, because it's not a trap if you can see it, and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 7 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale. What are the buyers doing well? Well, they didn't allow the breakdown of Tuesday's low. You can see we've closed back over the daily 50 SMA, and we've closed just a hair over Tuesday's high. So 3 strikes or 3 check marks for the bulls in here. However, it's kind of where it stops. If you think about what the bears did well, there's a good rejection here of the daily 20 SMA, which is great confluence with the weekly breakout level, so bulls unable to get up and over that. You could also see here that we've closed underneath the 2-week equal low in here at 686, and for all intents and purposes, this is still just a double top, break of the neckline for a lower low, and this could easily start to stage a lower high here on the daily timescale, a firm lower high at that, because the hourly trend has flipped to up, right? So all things considered, it's not all that great. Oh, and the cherry on top, right? We technically have a little bit of unfilled gap in here, which just means that the buyers couldn't get the job done all the way through thin structure. So the more I look at the chart, the more I'm like, yeah, the news cycle is getting slightly less bad, but we didn't really recapture a ton of key references here on the daily timescale. Let's quickly drop to the hourly. I do just want to point out, again, here's your hourly inverted head and shoulders. You could say low, lower low, higher low, and of course from here and here, higher high into today's afternoon rally. I would tend to think that it's all about this equal high set right here at 684.25 into the remainder of this week. If we could do battle above that, technically you're just trying to produce hourly higher lows. But I'm not sure I'm totally convinced if this is still acting as overhead supply here. Now, in the intro, I mentioned that there were some pretty big threats out there that had nothing to do with tariffs, and you may have realized I've added a few things here to the sector watch list. Look no further than your Mag 7 names, right? If we just go to a daily chart, and we're going to bounce around a little bit in today's episode just to tell the story a little bit more cleanly. I mean, this is a horrible looking chart, right? You've gapped down from what could be considered a little bit of head and shoulders here. Never mind the major head and shoulders happening here. This is a total right shoulder. This is a neckline that we haven't broken down through yet. But again, on the gap down, I mean, look at today's bar. We closed back inside of Tuesday's range. There's still a lot of overhead gap that was not closed. Anything underneath 62.65 is pretty ugly for the Magnificent 7 as an ETF here. And then look no further than something like software. And what primarily comes to mind is Microsoft, quite literally. And this is also just a horrible looking chart. In terms of the long side, right? It's pretty good if you're short, but this is a massive new swing lower low. We'll give a little bit of credit. Yeah, sure, you've got a daily hammer in here, but you didn't even test Tuesday's high. The gap above is completely unfilled. You closed underneath Tuesday's low. There's just like nothing here that's overly compelling for a big reversal and a huge rally in the S&P 500. Now, this is certainly relevant for the QQQ Nasdaq. What makes the S&P slightly different, of course, is the inclusion of financials. But let's just take a quick peek. I know we'll get to the sectors later, but this is also just a horrible chart. You have an inside inverted hammer, could not take out Tuesday's high underneath the daily 50 SMA, and you just still have these 2 equal lows that I don't want to say they're begging for a breakdown, but I wouldn't, don't color me impressed if the market does something like this. Like, fine, that's totally within reason for this daily chart configuration here with the inside inverted hammer from today's session. Just a complete failed breakout on the weekly up and over this previous range high. So if we just go back over to the Spiders Cash ETF over here, again, I'll give the buyers credit where credit is due. You didn't take out Tuesday's low. You recaptured the daily 50 SMA, but that's kind of where it stops, right? You really need to see a pretty impressive start to tomorrow's session if we're going to start to build bull flag acceptance in here on the hourly. There's your bull flag on the hourly, right? And then Brigade bolt it out to new highs. If we drop it back down to the hourly chart and just zoom in, I do want to throw on a Fibonacci retracement from the high of this move to the low. And all this is doing is reinforcing key levels for me. Notice that the 38.2 is right here, right around that 684.25 spot. That's beautiful. If we could stay above that, at least we're hanging out, treading water in no man's land. 61.8 is the 20 SMA, 688.75. It's the exact level. So the fibs check out here being relevant, reinforcing parsing the numbers. If we come in with the intraday anchored VWAPs, you'll also notice the same thing. Notice the cluster here, and notice this. That's primarily the major low anchored VWAP from way back over here. That is the 20th of November, NVIDIA earnings day back here, right? That anchored VWAP is supportive around that 684.25. So all things considered, I think we know what the name of the game is. In here, cautiously maybe bullish. If you have more of a bearish bias than I do, you could just simply say that, no, Matt, just read the trend for what it is. This is a daily lower high. Fine. I'm cautiously bullish in here personally. If we drop underneath, absolutely back on the bear saddle. And if we get back above in here, fine. Maybe trying to turn the corner. I'd need to see some improvement out of the Mag 7 ETF as well as software, especially financials, if this is going to be divergent from that of the Nasdaq. And speaking of the Nasdaq, I mean, we could just look at the XLK as a proxy. If I could even find it on my watch list, there it is. This is also, I mean, I hate to say it, but not really a pretty chart. You've got a huge amount of overhead supply here, rejecting the moving averages, not closing over the 50, not closing over Tuesday's high. It doesn't really look great closing right at the 143.75. Now, the monkey wrench here, of course, is just that next week we do start to get Mag 7 earnings, and those gaps could start to really change the way that this chart looks. But at face value, currently into the end of this week, I just, even though the news cycle is getting incrementally better, I don't know if I can get fully on board the, hey guys, let's go back to all-time highs and smooth sailing from here, and it's just got to be, nothing but roses and daisies and rainbows and butterflies. I don't know if I'm seeing it, right? So that's the S&P. Let's take a quick look over at the market internals. If you're not familiar with internals, check out the video tutorial in the top right-hand corner. We did see strong volume inflows, but we also saw strong volume outflows yesterday. We had a pretty pinned advanced decline line yesterday, and again today, an equal opposite. So if anything, this is just more indicative of volatility, which is absolutely what we've been getting. You can see the same thing here on the cumulative build, bearish, and then back to bullish on today's session. Look at how in here it was also fairly flat after that midday rollover, right? Here's that midday rollover, fairly flat on the index scores that's taking place. Cumulative build also fairly flat. That to me just means that ahead of the actual tariff reversal in here, it was just bearish. It was just nothing more than, hey, rallied into the early stages and then sell everything. Like, this is just an opportunity to sell at higher prices, right? It's kind of what this suggests here as this pairs back, and this pairs back to the zero line on the tick itself. As we jump on over to market profile, just to get a sense for how this is actually shaping up, I'll give bulls a little bit of credit over here on the profile as well. If you're not familiar with profile, check out the video tutorial on the top right. The main thing to take away here is just that the point of control is left low in the session. So it doesn't matter, you could play long or short, just put yourself in the shoes of how those people feel. If you're long from down here at the point of control, happy. If you're long from down here at the point of control, happy. No reason to really panic out of this. If you're short from down here, oh my God, what the heck's going on? And oh my God, what the heck's going on? We know the point of control is the, fairest price to do business, so to speak, based on the highest volume node of the day. If that's where positions are being held from, I would say that the longs definitely have the advantage being above both of these points of control. The ideal hold, of course, is just this, which is very close to the value area high from today's session. That's loosely around 69.05, going back over to the spider's cash. It's the same level as this right in here, right there at 684.25 on the SPY. Let's jump on over to the QQQ. Let's hit the daily chart first. It's going to look very similar to that XLK, a little bit better. I'll give a little bit more credit over here. The reason I'm doing so is you did close over 613, which I would qualify as the bottom end of the range. It's the high of the bear engulfer from 1120. You did still reject the daily 20 SMA. You closed right at the 50 SMA, closed right near Tuesday's high. You didn't take out Tuesday's low, so very similar picture, maybe a little bit weaker with a less confident close above the daily 50 here on the Nasdaq. And we also know that this did not go out to a new all-time high in this attempt over here. So all things considered, this trend line is broken, and ultimately you could say that this is a backtest rejection for a lower high. I would sort of agree with the sense that, okay, from here to here, absolutely have a lower low. From here to here, you even have a lower low. It's very possible that we could start to get a lower high there. I wouldn't get overly bearish until the range actually breaks. Remember, in a range trade, we basically just want to try to buy the lows and then up here, sell the highs, right? And as of right now, considering that this could be a bit of a look below and fail, oops, let's try the crayon, please, look below and fail, maybe this is a long opportunity off the bottom end of the range, but I have my reservations based on what I've already pointed out over here with the Mag 7 and the software cohort, right? There are no financials over in the QQQ Nasdaq 100, so eliminate that from the thinking on this particular chart. It's a very, very timid market. It's a very timid tape. You have to know what's going on in the headlines. You have to know exactly who's speaking when, what's going on with the Fed, inflation, labor, tariffs, Greenland, everything. You have to know about it all. So as of right now, base case is that we're back in the box. We're back in the box. We're trying to hang in there in the lower third. If we can support here for a higher low over 613 and then Brigade bolt like that, I would tend to favor longs just for range rotation. Nothing more, not all-time highs, not, oh my God, the market's so bullish, we're going to the moon. Simple range rotation. If we drop 613, I think we're kiss it goodbye underneath the Tuesday low. That's at 607.50, and then from there you walk down your previous references on the daily, 601.65, right shoulders of the inverted head and shoulders here, 595.25, 583.50. That would be, this is not my forecast for the end of the week. Please let me be clear about that. I'm just giving you the numbers. Remember, as of the gap down on the Tuesday open, the expected move for the week means a little bit less. These numbers come from Friday, and over the weekend, as the market opened up there on Monday for the futures, the expected move is within reason that you could come in here and test this low at 601.65. Just wanted to throw that out there as a potential data point to have in your back pocket. If we think about the Fibonacci's and anchored VWAPs, this is just a midpoint cluster. It's the middle of the range. What do we say? Don't diddle, don't fiddle, don't do anything in the middle. Don't exchange in the range, don't enter in the center. There's your Fibonacci's, no man's land, right in the midpoint. Once again, it's a pretty lackluster chart on the Qs, just trying to balance here off the bottom end of the range, really, and we'll take it day by day, moment by moment, tweet by tweet, ultimately. Let's go on over to our NASDAQ side of the market internals. We're moving fast today. I love it. We've got huge volume inflows, but we had decent volume outflows yesterday. Same picture, same story as the S&P 500. The opposition here just screams volatility. If you're like, oh my God, I'm getting shaken out of things left and right, it's so ugly out there. That's just the market you're in right now. You're in a very volatile market, although the VIX is coming down a little bit, which we'll take a look at in just a moment. Let's finish up the NASDAQ side with quick peek over at the profile. I just want to point over here how there is a discrepancy with the point of control. It was not left lower in the session. It is technically over your Tuesday high. So the key here on the NASDAQ is that these buyers cannot be made to feel. There we go. You don't want to disappoint those buyers is basically what I'm getting at. So if you start to lose Tuesday's high, on the NASDAQ in particular, I think it gets a little bit more nasty, and that likely should just cause drag in the Mag 7 names, should cause drag in the software names, and unless financials are really putting on a rock star show, which it doesn't look likely as of its daily bar close, maybe the S&P holds up, but it would be a very, very difficult circumstance for that to take place, right? Let's go back on over to the platform. Let's take a peek. Let's take a peek over at the IWM. This thing's just on a tear. I mean, it's bullish across the board here on small caps. It does speak to broadening out of market breadth, which I believe is a more bullish indication. It's just very difficult with the heavyweight Mag 7, right? How important and influential that is for the S&P. Very difficult to get a bullish feel for the tape over there in the market. Now, again, I'm open-minded to it. If the market wants to prove it over 689, if we start accepting up here, I'm open-minded to the proof. Maybe the small caps start to tell that story. And of course, just to bounce around, we're in that theme and spirit today. Oops, RSP, if I could type in the proper order, we're moving so fast. RSP, equal weight S&P 500, is out at the all-time highs here. Right? It did not really do anything detrimental. It certainly offered a higher low. There's no problems there. This is over a rising 20 SMA. 50 SMA is nice below us. RSP, breadth-wise, looks pretty darn good, and small caps are kind of a mirror of that. I'm not a believer in this dash for trash marking the end of a rally. You could just go back and simply study a chart that has a Russell and then NASDAQ ratio, and then just put the NDX underneath it plain. I mean, other than 08, go find me a time where the dash for trash actually marked a substantial top in the market. It just doesn't happen. So, you could go figure that out on your own, or you could just say, okay, this speaks to broadening market breadth, and that's fine. The Mag 7s, though, look fairly weak. That's going to be a problem for the market, right? That's ultimately what this story is telling over here. If this could go sideways, I would love that. Ultimately, I mean, this is a pretty nice move, right, to mirror what we had there in terms of symmetry. If we could build out some more now sideways action here for a new flag, that would be ideal for small caps. You are starting to get at that threshold of extensions through the 50 SMA where you start to say, you're thinking twice about new longs up here at the all-time highs. It doesn't mean short it. It's still bullish here in small caps, but new longs might be a little bit of an issue. You certainly have nice anchored view apps all below us. Everything in terms of price action is above. If we slap on a fib from the top, or the bottom I should say, to the top, starting to offer rough confluence around that 260 area. And ultimately, one of the exercises that I would encourage you to do is, hypothetically say that the small caps continue to break out here. Let's say we just start testing the upper edge of the weekly expected move. Now suddenly your 50% retracement spot on, 258. I would say that this in here is spot on at the 260 area, and that's not all that unreasonable. This is a much stronger daily looking candle with opportunity for upside, closing at new all-time highs for follow-through, right? It's not really all that unbelievable to think that we could go higher and get better confluence out of the fibs should the market end up pulling back in the medium term for small caps, but generally still bullish on this particular view. Let's also just from a trend count perspective, to be very clear, certainly a higher low. You could qualify that as a higher low there. Let's get on over to the Russell side of the market internals and quickly check in on these guys. Huge volume inflows. Notice the lack of volume outflows on Tuesday. Speaks to, again, breadth being pretty substantial. Not as good on the advanced decline line Tuesday, and still getting opposition over here, but clearly overshadowed on the Wednesday session. Let's finish up the smalls with none other than our Russell futures here. Of course, market on close orders almost always bring the point of control right to where the close is, and there you have it. At the high of day, point of control migrating higher with price just means that people are willing to commit, but once again, just going to be a little bit easier to topple this on the Russell. And I would just simply say that one of the ideas to watch for would be, okay, consolidation over these two prior highs from last week. Fine, no problems. You start to get underneath that, and I would think that the range rotation is in play like this on the hourly, right? As I zoom into this, perhaps, play nice, think or swim. I know we're moving fast, but you gotta play nice. Come on. There we go. I would start thinking about this, right? Consolidation, look above, fail. That lower high right here where that white dot is, that probably sends you back to the midpoint, right? Look above and fail on this as a balance range, no problemo, mean reversion, let it consolidate, right? So that is the look for small cap. And again, the point is that would be underneath the point of control from today's market profile that we were just looking at, okay? That is your small caps. Those are your small caps. Let's reset this out to a daily chart. I know we hit the sectors already to some degree, hit and miss, but I just want to point out weekly performance led by healthcare. That's D for defensive as this market tries to get in gear. That doesn't really give me a warm and fuzzy feeling inside. The other thing that's still performing really well, it's not really doing anything new, but it's consolidating high and tight, is the XLP, which we'll see, and that's also defensive. Semiconductors had a hell of a day. Dare I say that word on the video here, but nice day, and of course, one of the biggest risk-on components of the market right now, preventing, in my view, an outright collapse. If we didn't have semiconductors doing what they're doing, just take a look at this chart. If this was not just like lows, higher lows, higher lows, higher lows, higher lows, if this was anything other than a rally today, I don't think the market would have recovered in the manner that it did, right? So semiconductors are kind of the savior. Let's go back over, though, and let's take this from the top down respectfully. XLV still looks good, looks bullish in terms of its overall trend. These are equal lows. This is maybe a lower high, but we're trading and just consolidating near all-time highs. Remember that this had a heck of a rally out of these lows into this move here. So a period of consolidation is very well appropriate for this move on the XLV. I like how it's happening. I like how it's respecting the 50. I like how it's bouncing higher. We just have to remember that it is a little bit more defensive for the market. Let's take a look over at that semiconductor chart. I know we just talked about it, but I just want to reinforce one more time that if semiconductors do take a dive, that pullback there is A-okay. That's a non-issue, right? So 376 is the line in the sand for a weekly, right, higher low out of semis, and that would remain bullish for the broad market. To get there, of course, that's a problem. Probably looking at a QQQ breakdown of its range more meaningfully, but it's not the end of the world for semis. What would kind of need to take place, if you think about it logically, rotation in software, or technology, I should say more appropriately, rotation in technology would need to continue. Semis and hardware can pull back, but you would need to see IGV at least catch a little bit of a bid. Even if it's just counter trend to its current trend, you need to go counter there. Otherwise, this is just going to spell huge trouble and pain for the market. XLB out to new all-time highs today. It's the lightest weight sector, but at least it's not a headwind. Let's go on over to energy. Also looks pretty good, moving in the upward direction. No real complaints about this. Higher lows available. We know that powering data centers PDC, not prior days closed, but powering data centers is a big theme for 26. Industrials look pretty darn good. No problems over here in industrials, all-time highs. This is a little bit heavier weight, 8% of the S&P 500, so this is helpful for keeping this guy afloat over here. If we look at discretionary, I think this is a big place where the market can prove it if we are truly going to rally on the tariff stuff. You want to see Amazon really catch a bid over its hammer high, and we'll talk about that trade as we move through the core list. And you want to see Tesla, right? Tesla, can you get back in gear and stop this daily nonsense that you're dealing with? It's kind of an iffy close right on the level here. If we start to rally tomorrow morning, that's certainly bullish for the market. If we start to pare this back underneath 120, 125, that's a little bit of a problem, and we start thinking through the lens of maybe a bit of head and shoulders. Now, of course, the neckline would be way down here. We don't want to front run that too much on the bear side, but it's like do or die right off the open tomorrow for XLY. Do we get a move higher? Do we get a move lower, right? Let's keep going. TLT long bond getting a little bit of a bid underneath it on the tariff announcement. That makes sense. Investors maybe trying to ease back what they're trying to speak with their dollars, right? Bond vigilantes, they're selling it hard over the weekend and now, sort of stepping in and saying, all right, if you're going to walk back the stance, maybe we'll buy some bonds, and that sends rates slightly lower, right? Let's go on over to communications, just from a supply and demand perspective. XLC, Netflix, good counter trend day on Netflix. It's not longer on the core list, no longer on the core list of companies, so I'll just bring it up manually here. Nice counter trend off the earnings gap down, but boy, oh boy, is this thing still an ugly, ugly, ugly stage 4 decline, right? Just well underneath the daily 200, barreling down on the 20, the 50. It's just ugly, ugly chart. So although the XLC has a lot more weighting towards Google, right? And Google honestly didn't look half bad holding the daily 20 today. That is in the core list. I'll just bounce over to it quickly. Nice hold at the 20. That's going to prevent your XLC from an outright collapse. So this is a heavier weight-ish, risk-on-ish sector. I'd love to see this thing back over 115.50. That would be compelling if we just stage a lower high here. Unfortunately, no dice, and the bears come out to play. Let's take a peek over at the XLP. This is one of those sectors, once again, it's D for defensive. Hasn't really performed well this week in terms of percentage points, but boy, oh boy, is that a high tight flag if I've ever seen one, right out of this as a base. So, you want to go think about things like your Costco. You want to go think about things like your Walmart, right? Look at Costco here ripping now on the recapture of the daily 200 SMA. Walmart, right, looks pretty darn good in this high elevated consolidation over here. What else comes to mind here? Coca-Cola, not so much, but trying to work itself out of this. Pepsi, more like an MDLZ, Mondelez? What's Mondelez? There it is, MDLZ. This looks a little bit more appropriate with those, the Costco of the world, for example. And then we'll check in on a CL, a Colgate. This also looking good. And then maybe a PM. Philip Morris. I think this hammer, it didn't quite make the cut for me as a trade idea, but if you're interested, that's pretty darn good there. Hammer right off the moving averages in a nice breakout. Check back for a higher low, not the worst look in the world. So that's PM. Anyways, those are some components of the XLP. Let's keep going to the XLK, which we talked briefly about already. You're underneath and rejecting this overhead supply. I do see that as a threat, watching 143.75 very closely tomorrow morning. Mag 7, I don't know that this is going to stay on the sector watch list forever, but it is at least important as a watch here at 62.65. We've talked about that, as well as software here. We don't need to beat that dead horse. Let's keep going to real estate, midpoint of the balance range in here. There was a trade idea I was considering on a REIT. I don't know. Real estate's just kind of a boring sector to trade, but if the setup's there, right? The setup's there. Financials we talked about already. Again, don't want to beat a dead horse, but really careful underneath those 2-day equal lows. If that breaks, that does spell trouble for markets. XLU, if we take a look over here, really don't have much of a thesis on utilities these last couple of weeks. I think it's more noise than anything else in here. It's not a headwind or a tailwind as of yet for the broad market. It's such a lightweight sector. So that's that. Again, through the sectors, I would say that primarily I'm identifying threats. I'm seeing some problems that are not fully resolved. I don't want to be any more bearish than I have to be. I'm just pointing out what I'm seeing, right? Here's the ratio charts. If you're not familiar, check out the video tutorial in the top right-hand corner. XLK ratio still looks awful in isolation. Financials, giving up the 50 looks terrible. This is maybe neutral. This doesn't look all that great. This technically says a little bit more risk off. This is risk off. This doesn't really look all that compelling. Maybe, again, that gets a check mark, but I don't know about you. Really, when I'm like, okay, all-time highs, let's get there, you need this quadrant up top to be looking pretty pristine, and we do not have that at this point in time. You could take a look over at the A set, and you pretty much say the same thing. We'll go neutral on this one. I would even start to go neutral on this one, right? You've got a higher high, but you've also got a lower low. Maybe it's trying to hold the 50. This doesn't look all that great. I'll give this one a check mark. This doesn't look great. This doesn't look great. I mean, we're not even batting 3 for 6 on the risk-on cohort right now. So just really, again, trying to point out this is not really the best reversal that we've seen in the market. The news is getting less worse, but we're not seeing the underpinnings really pick back up yet. Here's the gold ratio out to a new low, technically defensive as gold breaks out. Sailor shift already back down to red, and you could see over here a big failed breakout to the top side of the bear flag. I think that this could easily go down and test Sailor's actual average of about $75,000 on BTC itself. That's really not that far away here. If we take a look at the TLT ratio, no big change in risk appetite here over the last couple of days. I don't think it's worth reading into too much. Let's get into dollar and rates. A little bit of a dial back up on the dollar here on the reversal of the tariff stuff, but as we saw on the TLT rates coming in a little bit, markets should like that. And again, this is probably a reason to believe why the IWM has been a little bit, I guess not, because really you gapped up here on Tuesday. It's not strictly rates that are driving around your small caps as of right now. Anyhow, let's take a peek at the inverted ZT to get a sense for what the Fed tracker tool is doing. And as we know, probably still at about 90+% odds. I actually don't recall what the close of today was, but let's take a peek over at the Fed watch. Let me give this a reset and just double check. Still at 95% probabilities. This is next Wednesday. So we will be streaming that live next Wednesday. I just realized that my black crayon is yellow from this morning. So let's maybe try red. There we go. So there it is. There's your 95% odds for a pause in the next meeting. We'll stream that live. And then the same night, we have Tesla earnings next week. So let me know in the comments section, and I'll probably ask again in the weekend video and the pre-market preps headed into this. Do we just want to do a group Tesla live stream of earnings after the close on the 28th instead of a midweek market update? Let me know what you think in the comments section, and we'll see if we can get the job done there. Let's keep moving, though. Economic calendar here has been pretty quiet. It's really just the noise from a fundamental front on tariffs. So Trump's speech there, and then more importantly, the Truth Social post unwinding the tariffs, the taco basically. As we move into the rest of the week, jobless claims, really GDP is important at the 8:30. 10 o'clock is going to be a ton of inflation data from some old metrics in here. I think the market looks through that primarily and doesn't really care at the 10 o'clock time frame. And then on Friday, it's the flash manufacturing and services PMI from S&P Global. Revisions here probably don't move the needle all that much. Earnings this week. Ooh, whoa, look at that. Zoomed way in on that thing. Netflix the other day, not really faring well, right? That was headed into today's session. And then primarily what I'm looking for next, Intel, Intuitive, Capital One, even Alcoa there with aluminum doing fairly well these past couple of sessions. So that is the data to be released. I'd say Intel might set the tone for some semiconductors a little bit further, but next week is when things get busy and the big Mag 7s really come out to play. Let's go back on over to the platform here, finish up our supporting evidence and keep this thing moving along. Bond relationships getting a little bit better here on today's session, backing off. This one's in terms of inflation. This is in terms of labor. We want this to start paring back a little bit and going sideways while this starts to come in a little bit. That would be good for labor and good for inflation if both of those things happen at the same time. Let's jump into credit spreads, both still suggesting risk on here underneath the 50 SMAs. Let's get into, there we go, HYG. If you're a bull, this is a data point that you want to latch onto and scream from the rooftops about, right? You technically have a bullish divergence here in the HYG junk bonds. Junk bonds are suggesting, hey, rock and roll. Everything's all set, right? Not only did you not produce a huge lower low, you're already sitting on a higher high in the short-term divergence on junk. So, I don't want to hear it in the comments section. Oh my God, he was so bearish. He didn't point out anything bullish and the markets are rallying. This is your bullish data point. If you are a bull, this is what you need to latch onto right here. Junk bonds, screaming risk appetite. Let's go. Let's rock and roll. All-time highs, right? So that's the HYG. Let's get on over to total breadth, which we looked at RSP already, but breadth moving higher here and here is not a shock. RSP at the all-time high, as well as the QQQE, right? So equal weight NASDAQ is right there. You would think that this thing could be a little bit weaker, maybe in the midpoint of this range, but it's not. This is pretty good on the equal weight side of the market. That's not really what I'd expect ahead of a massive breakdown. If we look on over at the VIX, so again, I guess my bottom line here is that it doesn't seem as bullish as it may be on the face value, but it's also not like end of the world situation. VIX pairing back off the 2050 handle is a little bit more healthy for markets. This is like back down in comfort zone. I think, unwinding some of that tariff stuff from the weekend is a big deal. It's huge steps in the right direction. You can see the VVIX also pairing off some of that back here at or underneath the 103 handle. If this closes the week under 103, bullish. Right? I'll give credit where credit is due on the bull side, right? Here's your huge attempt as we got close to backwardation, but never actually did. These are the updated contracts on the study here. We're in contango across the board. Same thing on the 9 versus 30. And then over here on the VIX 1-day, back inside of the comfort zone as well, between about 1275 and 745. Let's get into, I just want to bring up the skew, which is insurance, basically. This is, oh, there it goes. It must have just updated into the last little bit. Market on close, right? So this was up here, meaning that people still had insurance. They're starting to pair out of that as of today's close. That's pretty interesting. So there you have it. Let's take a peek back at our core list of companies, starting with none other, the one company to not rule them all anymore, NVIDIA. This thing is just kind of a mess, if I'm being honest. I don't love it long side. You have a lot of overhead supply here. You're under a 20, under a 50. You're underneath this, right? If this was going to be double bottom neckline, rock and roll, that's kind of where you need to launch from. I could see the argument for a weekly higher low. I just don't think the chart is so straightforward anymore. I don't really love the idea of forcing NVIDIA longs. AMD is a clear superstar these last couple of sessions. I'd say stick with that. If anything, I don't want to be the guy to say it, but there you go. The one company to rule them all, the one stock to rule them all. Is it too tired? Is the easy NVIDIA AI money trade over? Maybe if this ends up losing the daily 200, we shall see ultimately. But for now, the stock has really gone nowhere over the last little bit, and trying to trade NVIDIA is just not, in my view, the best vehicle right now. Let's keep moving. Let's take a look at Apple. I think Apple is a little bit stuck between a rock and a hard place. Undoubtedly bear flag breakdown here, so lower highs on the daily underneath 255.85 are in play. But on the hourly chart, why do I want to try to long back into this upper wick on like a Stevie Wonder if this is clearly rejection and overhead supply from today, closing fairly weak back down underneath the opening print? I don't really like that. The other sort of hard place that it's stuck between is on the weekly. If you just go back out to here, if it builds a weekly hammer, I could be interested in a weekly hammer and then like a recapture up and over this top side like that. Maybe earnings around the corner here, just something to have in the back of your brain as well. Apple does not, to me, seem like a top priority for tomorrow, given the upper wick. If there was no upper wick there, then sure, inside bar high break, sure, absolutely. But for now, not in love with it. Let's go on over to Microsoft. I think that this just looks soft and weak, quite literally. IGV is suggesting the same. Lower highs here, rock and roll for a short. You get here, fine. I would even just say look above and fail, right? How can you position for shorts on these rallies for a lower high is the name of the game on Microsoft. Great gap fill reversal on Tuesday, and now just sort of getting that follow through. So pretty weak out of Microsoft. I would be looking for shorts more than longs. You could go counter trend, but I think it's to establish a lower high. Amazon on the daily chart needs to resolve this hammer higher if it's going to preserve its little look here of these curling higher lows, right? You're sort of building a parabola, if you will. It's not quite linear if you do something that looks like this. Obviously, you could start to do this, and now we're having some fun. But the hammer there, if you could retake the 50 early on in the session, that's where it might be a little bit better. Let's go over here to the hourly chart. It might be like a two-step process. Number one, you're here. Then number two is you're over the actual 50 SMA on a Brigade bolt higher low, and 233.25 unlocks the gap close overhead. Now, of course, gap fill reversal, 20 SMA rejection is absolutely a threat if this market's going to continue to struggle. So like I said, we're not like fully out of the woods out there in the broad market. If anything, Amazon should have been, in a picture perfect world, previous resistance acting as support, right? And that's just not taking shape. So we can't ignore the fact that this is overshooting like a banshee, like a wild wildebeest here at the key level 233. Let's go on over to Google. I thought that this looked somewhat respectable off the daily 20 on the gap into it this morning. Also great strength. Kind of great strength into the midday when this did not pull back and test the lows, and now just building a bull flag on the hourly. I think very simply, bull flag consolidation over 327, monitor for some upside there. If this starts to sweep, I think it's just more fun in games at the 20 SMA, and I probably wouldn't love participating in that personally. Let's jump on over to Broadcom. Fought this thing tooth and nail all day, but we did come out on top, thank goodness. Thank the trading market wizards, I suppose. Although that does have a new connotation to it. Market gods, shall we say. Here is your head and shoulders. I still think this thing has a date with the daily 200 SMA at some point. I don't know about new shorts after today's action. I would tend to think that you got your 2 down days on the gap and go from Tuesday. You could start to, balance off in here for a flag. What I just don't want to start happening is initiating new shorts into support here, right? Risk reward wise, that's just kind of dumb. So in a picture perfect world, it's either like a lower high that then starts to fail again, and now we've really got it pressured and tight in here, but this is not tight enough, right? You either need to tighten up or you need to rally and reject the 20, then come back down. I would caution another attempt at new shorts into the lows if you're either not already short from the 20 or if, anything outside of, I guess just a scalp attempt through the gap. That's kind of it. But Broadcom, I think it's still weak. I think it needs more downside, but forcing new shorts after a not failed follow through, but just an all day, just sideways before following through to the downside. New shorts down here, not my favorite. All right. Next up, Metaverse. I think that this is staging a lower high. I think it looks pretty good, actually. Look at the upper wick starting to suggest the gap fill reversal. If we just reject this 620 area and roll back over, not bad. I would be looking for a continued move to do something like this. Gap fill and then lower high here. Underneath 614.50, I would look for just, Brigade Bolt without closing the gap, because that's technically telling us buyers can't get the job done. If we rally over this, I would say that this and here, that's your next short up against the daily 50 and this 637.50 area right there. Let's move on over to Tesla. Tesla catching a pretty decent bid on the tariff cancellation notice, if you will. A little bit of look below and fail on this prior low. I don't know that I want to trust it yet. It's just kind of lower high, lows, lower lows, lower lows. So you're still in a downtrend. I'd say let's see what happens with earnings on this Tesla. It's been a little bit fickle, unless you're scalping it very, very, not against a daily pattern, but if you're scalping it intraday, you're doing your thing, that's fine. But daily setups for it, not really the best as of right now. JP Morgan in the financial sector looks pretty soft down here and weak. I would expect kind of a date with 200, and again, the bottom end of this balance range. When we get here, there might be some sort of counter trend bounce. That's a possibility. Let's take a look over at Palantir. Still looks weak. Long lower wick, so kind of like a Broadcom. I would tend to think you've gotten your down move here. Look for the next best lower high, like a daily lower high, not just a single candle wick there, but a stronger counter trend on the hourly that might actually establish like an hourly high or low, go counter trend, and then we're here, right? That's kind of your short up against 171 to 75. If it's going to recover, you really just got to be above that, and I don't love action inside that previous congestion there, so not really in love with the Palantir chart. I would just think that it tends to make the most sense to try to stick with it short side. Let's go AMD, biggest winner, or maybe not the biggest winner, look no further than the SanDisk, my god, but AMD clearly leadership over NVIDIA. That's just like cut and dry, no arguing with that. So out to a new high from this pivot here over 238.35, excuse me. I think that this is very straightforward on the hourly chart as well. You either consolidate, play some fun and games down here and then go, or it's just tomorrow you get a gap up and it goes again. In the after hours, you're already 252.70 by 74. I mean, you're pretty much right at the high of day, right? So it's very possible here that AMD continues to just get bananas back up basically to the all-time highs. I mean, it's just spitting distance away on AMD. All right, so that's that chart. Just be a little mindful as we start to get a little extended here. Market is... I mean, it rewarded AMD breakouts, but wasn't really rewarding many other breakouts. You've been seeing this massive volatility, right? It's going over to Robinhood. This one's getting tight, just inside day there. But for the bears, right? This is just can't catch a bid for the life of it. Daily 200 SMA. Let's go down and give that thing a little kiss and see what the market has to say about that. I don't know about new money shorts into it. The move has somewhat taken place already, right? Which is a little hard to catch with that large breakdown on Thursday of last week, sub 114. Anyways, Robinhood to me, absolute downtrend, still leaning bearish on it. It's just a matter of how do you participate down here. A little dicey. Let's get into these trade ideas. First one's on solar. ENPH, Enphase, is going to catch the first one. First thing I want to point out is just that you are underneath a declining 200 SMA, so that's a first caveat. But I did like how this had a tiny inside day here relative to this as a potential higher low, right? If this is inverted head and shoulders and solar renewables are maybe the next power source, or at least we could think about that as a part of the AI narrative, power generation being a part of it, right? Enphase up and over this, daily 200, this high could be a target. So that's 36, over 36 into about 38 is your daily 200 SMA value as of right now, and that is trade idea number 1. Again, best longs are usually not below the 200, so just keep that in the back of your brain. CrowdStrike, CRWD, if I could get the D in there we go. Your best shorts are actually under the 200 SMA, and this is on the short side. So you've got the moving average stack curling in the right direction finally. You've lost the 200. We know that this is somewhat software related, right? And I just think that the engulfing bar, technically you looked over Tuesday's high, did not close above. It's just asking for like a 2-day equal low breakdown, and there's a little bit of room here. It's not the best chart in the world. There's a little bit of room here into about 422.25. So if there's some kind of breakdown and continuation out of software, that's a possibility. Please just be aware that if you get IGV, just as a heads up, if this thing snaps back hard over the high from today, you're probably not going to want to look, there we go, at CrowdStrike short. ASTS is next up on the lineup here. This is a fairly straightforward setup. Previous high from the cup, starting to act as a little bit of support in the lower wick there. We know that space theme, aerospace, rockets, the whole 9 yards, has been pretty hot recently, and 101.85. Can we tighten up in here, build something for a higher low over the 20 SMA and get going in the upward direction, back to, quote, the moon, as they say. Of course, Rocket Lab is also in the space. This was not an idea. RKLB. Geez, my fingers are off there. Notice the hammer off the 20. That looks pretty good as well. Just a little bit more extended on this one. About the same, perhaps. 5.85. What was ASTS? 4.18. A little bit more extended on a Rocket Lab, for example. You could also look at a Planet Lab PL, which is also much more extended, 8 times the ATR from the 50 SMA here. So just be a little careful of that one. Lunar, just to go through the theme quickly. Lunar extended there, 20 SMA bounce, and then, of course, Sea-Doo. This is kind of the runt of the group, if you will. Anyways, that's your space theme. ASTS is where I would keep the attention at 101.85. I know we went through all the components, but this one, in my view, looks the most respectable technically. If we go over to the data center stuff, APLD here, Applied Digital, not bad on a break of the wedge here. Very volatile, probably very frustrating for people trying to swing trade it, but over these highs, let's see if that can start to rock, and that would pair nicely with a Hut 8 mining, same thing, 20 SMA, volatile bar today, but it looks pretty darn good in terms of just the nature of the technical formation, right? You've got the cup, you've got the handle, or you could even just say cup, handle, broke out, and Brigade bolt above. Right, 55.45, still a big watch on Hut. Let's go TSM up next. And, there's a million of those things. APLD, Hut, Cypher, IREN, NBIS, Galaxy is the newest kid on the block, Riot, Marathon, the whole 9 yards. TSM here, I would love to see the pullback there. Reason being is that this is just such a long-standing monthly base. With TSM being, it doesn't matter if it's NVIDIA, it doesn't matter if it's AMD, it doesn't matter who's designing the chip, they're going to build them over at TSMC. So let's see if we can get this for a higher time frame idea. The chart needs some work. It needs to get deeper towards that 311.20 spot. And then finally, CRWV CoreWeave is also on the radar here. I thought that this was fairly nice. It's not the most symmetrical thing, but this is a pretty decent Brigade bolt opportunity up and over the top end of the range there with the daily hammer extending into this zone and then closing back up at the highs, of course. So if we go on down to the hourly, what might the trigger actually be? Probably something over 95.30 could be a watch for tomorrow. Some kind of consolidation here keeps it in play. Brigade bolt above. Daily 200 SMA is brand new, but right above us there as a first target. And then the origin of the breakdown here is up next beyond that. So that's pretty much it. That's what I've got in today's episode and installation of the Midweek Market Update. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. As always, we're live every single morning up here in the office at 8 a.m. Eastern time here live on YouTube for the pre-market prep. We'll build a game plan. We'll see what's going on into the day's session ultimately. Figure out where the best opportunities are. If there's anything moving pre-market that we're missing here in the core list. Metals, of course, are hot right now. I'd say watch your platinum and palladium. Those have not broken out yet. I would not try new longs in gold. I would not try new longs in silver. I also wouldn't short them yet. They're not parabolic tops quite yet based on your volume. So that is it for today's episode and installation. Have yourself a green rest of the trading week. And as always, I will see you in the next one.